All right, let's dive in. Today, we're going to break down a really powerful, systematic strategy that can literally turn your stock portfolio into a consistent income machine. It's called the wheel, and trust me, it completely changes the game. We're moving away from just buying and hoping and into the world of actively generating cash flow. So let's see exactly how this thing works.
So, have you ever been in this spot? You know that feeling, right? You do all the research, you find this awesome company you'd love to own, but the stock price, it just keeps creeping higher, always just a little bit out of reach. It's super frustrating, and it happens to every single one of us.
Okay, or how about this one? Maybe this sounds more familiar. You've got a portfolio, it's full of great stocks you really believe in for the long haul, but they're just sitting there. They're not doing anything, not producing any cash flow. That's kind of like owning a bunch of valuable rental properties, but completely forgetting to collect the rent each month. It's a huge missed opportunity.
All right, so how do we fix that first problem, being priced out of a stock you love? Well, we start with this absolutely brilliant tool called the cash secured put. And this is all about turning your patience into cold, hard profit.
Now this is a massive mindset shift. Seriously, think about that for a second. Instead of chasing a stock and hoping for a dip, you're literally getting paid to wait patiently. You get to pick the exact price you're willing to pay, and you collect actual cash right up front just for making that promise. You're getting paid to call the shots.
So here's the nuts and bolts of how it works. When you sell a cash-secured put, you're basically making a deal. You're saying, hey, I'm willing to buy 100 shares of this stock at a specific price, and we call that the strike price, if it happens to drop to that level by a certain date. And here's the best part. For making that promise, the person on the other side of the trade pays you an instant cash deposit. That's called the premium, and it's yours to keep no matter what.
And this is where the magic happens, because there are really only two outcomes, and they're both great. Scenario 1, the stock stays above your target price. Well, the option just expires worthless, and you keep 100% of that premium. It's pure profit. Scenario 2, the stock drops below your price. Now you have to buy the shares, but wait, you're buying the stock you wanted all along, at the discounted price you chose, and the premium you already collected makes your effective cost basis even lower. It's a win-win.
Okay, cool. So that takes care of getting into a stock. But what about that other problem we talked about? The stocks you already own that are just sitting around doing nothing. Well, let's flip to the other side of the strategy and see how we can put them to work for us. Let's talk about the covered call.
I absolutely love this analogy because it's just so perfect. You already own the asset, right? Those are your shares. By selling a covered call, you're basically collecting regular rent payments, the premiums, from the market. You are turning what was once a static passive asset into an active income-producing machine.
Now the key here, and this is super important, is that you can only do this with stocks you already own. So you sell a call option, which is just an agreement to sell your shares at a higher price, again that's the strike price, if the stock happens to rally up to that level. And just like before, you get paid an upfront cash premium just for being willing to make that deal.
And again, check out these two awesome outcomes. It's another win-win situation. First, if the stock price stays below your target selling price, the option expires. You keep your shares and you keep 100% of the premium. That's just pure income. But if the stock rallies up and past your strike price, your shares get sold, but at a profit you already decided you were happy with. Plus, you get to keep the premium you collected on top of that profit. You just can't lose.
So you can start to see how perfectly these two pieces fit together, right? The cash secured put is your go-to tool for getting paid to buy low. And the covered call? That's your tool to get paid to sell high. They're literally two sides of the exact same income-generating coin.
So, we've got our tool to get paid to buy low, and we've got our tool to get paid to sell high. Now, what happens when we combine them into one seamless, powerful, and repeatable system? Well, that's when we put the wheel in motion.
See, the wheel is a complete system. This isn't about just making a few one-off trades here and there. No, it's a disciplined, cyclical process designed purely for generating income. At its very core, it's a system that literally forces you to follow the #1 rule of investing: buy low and sell high. And the best part is, it pays you premium at every single step of the process. Let's walk through how this wheel actually spins, okay? Step 1. You sell cash-secured puts on a stock you'd love to own, and you collect that initial premium. Now, if you get assigned, that's great. You just bought the stock you wanted at a discount. So what's next? Step 3. You immediately start selling covered calls against those new shares, collecting even more premium. Then, if your shares get called away, fantastic. You just sold your stock for a nice profit. And now, with all that cash back in your account, you just go right back to step 1 and repeat the whole cycle.
It just keeps on spinning.
Okay, so understanding the mechanics is awesome. That's step one. But executing this strategy like a true professional, that's where the real, almost unfair advantage comes in. And here's the secret. This is not about guesswork. It's about using data to stack the probabilities heavily in your favor.
This right here, this is the absolute key to consistency. Amateurs guess where a stock might go. Professionals think in terms of probabilities. By using data, we can find trades that have a super high statistical chance of succeeding. We're stacking the deck in our favor before we even place the trade.
And I want to be really clear about something. This is not day trading. This isn't about being glued to your screen, stressed out all day. Not at all. This is a calm, low volume, and totally rule-based approach. It's designed specifically to take the emotion out of your decisions and to fit into a normal, busy lifestyle. Because it's all built on a foundation of data, patience, and good old-fashioned discipline.
So when you trade with a data-driven, systematic approach like the wheel, something amazing starts to happen. You can actually start to target specific, consistent, and risk-adjusted monthly returns from your portfolio. You're building a real income plan.
So for a lot of traders, a really solid, conservative, and consistent target is just earning 1% of your capital back per month in premium. Now, I know 1% might not sound like a huge number, but trust me, it really starts to add up.
Then, as you get more experience and you get even better at spotting those high-probability setups, you might bump that target up to 2% a month. Think about that. You're literally doubling your income stream using the exact same amount of capital.
And then you have the really skilled traders, the ones who follow their risk management rules to the letter. It's not uncommon for them to target 3% or even more per month. At that point, your portfolio isn't just a side hustle, it's a serious cash flow engine. But the key, always, is discipline and sticking to that data-driven process.
Okay, let's put this all into perspective, because this is where it gets really exciting. That 1% per month target, that annualizes to 12% a year. That 3% a month, we're talking 36% a year. Now compare that to the historical average return of just buying and holding the S&P 500, which is about 10%. You can see right there the unbelievable power of shifting your mindset from just chasing capital gains to generating systematic income.
So at the end of the day, mastering the wheel strategy, it's about way more than just learning a new technique. It's really about adopting a completely new mindset for how you view your portfolio.
This is the core idea, the big takeaway. It's time to stop thinking of your portfolio as just this passive piggy bank that you hope goes up over time. It's time to start seeing it for what it truly can be, an active, powerful engine for generating consistent, predictable cash flow, month in and month out. So I'm just going to leave you with this one final thought to chew on. What would it actually mean for you, for your financial future, if you could transform your portfolio from just a collection of stocks into your primary source of reliable, consistent monthly income? Because that is the true potential of the wheel.